Hi, good day everyone. I hope we are all okay on this beautiful day, and Jabulo here again. Uh, I just want to quickly show you something that we did on NASDAQ. Uh, I think it was early this month or late last month. This there is a markup that I sent on the group, and I don't know how many of you took it into consideration that everything that was marked up there will come to be effective sooner or later. And today we are exactly where our markups were, and I will not show that markup now here. I just want to remind you of something, and I will start afresh, do the same markup as a revision to others, and for some maybe it will be something new. I don't know. I'm doing this on NASDAQ simply because I want to show you how it went, not that I trade this thing, just for educational purposes, or if you trade it then you can take advantage of it. All right, as I always said, that NASDAQ is always bullish, and then we only sell a retracement, as you can see from here, up until here. NASDAQ has been on uptrend. This is from the 20th of October last year, the year 2020. NASDAQ has been bullish, and then with that said, we just have to highlight the important areas. Some call it the point of interest, or some call it area of interest. So we are not there to argue about the terminology. So as we can all see that I'll start right at the bottom. We have an order block that is not respected here. All right, and then again we have another order block which is not respected down here, and then again what do we see here? Okay, yes, we have another bullish order block here which is not traded into right here. All right. So now I'll zoom in just once to have a clear picture of what's happening. So we again have another order block which is not traded into right here. It is important to mark each and every order block because it is very much important. And then again we have this swing low here. Notice how I didn't say an order block, but I only said the swing low here. All right. We have this swing low here. This is on daily time frame. All right. This is what we'll focus on. Let me change its color to something else because this is what I want us to focus into. So as we can see now that NASDAQ has been bullish, but we took from the 20th of October. So on daily time frame, should NASDAQ break this should NASDAQ break this price here, then we'll consider NASDAQ to be bearish for some time. Only if it breaks this zone here, then NASDAQ will be bearish for some time, and I'm definitely sure that NASDAQ will come all the way down here, and then after that it will push up again, going high, forming the new highs again. Why am I confident that NASDAQ will come down here? Because after it broke this, after it violates this mitigation bullish block here, then it will automatically become the breaker block. Then instead of buying here, and then we'll have to wait for price to come somewhere. I'm not sure where we are on daily time frame now. On daily time frame, we only see this order block here, but on a smaller time frame, then we can see where price will reject somewhere and then go back again to the order block that it violated. Instead of it being a mitigation block, then it will be a breaker block, and then come down to respect this order block and then shoot up. And then if it trade below this order block, this still will be our take profit. This will be our main take profit only on daily time frame. All right, this will be our main take profit only on daily time frame. But I don't want us to discuss 1, 2, 3 order blocks, 1, 2, 3, 4 order blocks. I just want us to discuss this one here only. We're on daily time frame. I want us to discuss this swing low here. All right, this daily time frame, NASDAQ is still bullish until it breaks this price here, and then it will be bearish. Let's go to H4. So this is what I want us to focus on. All right, on H4, I'll put another line here, so that I don't guess what I'm talking about. I just want to show you exactly what I'm talking about. All right, zoom out just once. Okay. Instead of all those, let me just do this. Please stay with me, guys. Stay with me, please. Um, right here, yeah, exactly. So on daily time frame, this is an order block here, which is not yet respected. This one here. However, we see this swing low here, and why is this? This forms liquidity. This rejection here, it formed liquidity. Therefore, after the formation of liquidity, price will come and clear all that liquidity, and then it will go to the order block. It's either below or above it, and then in this instance, it's below this swing low. Okay, so price will definitely still come down here to respect this order block here. All right, so we still anticipate price, to come down and respect this order block here. However, we are now on this swing low here. I did say that whenever you are trading the order blocks, always start on a higher time frame, and whenever price come to your order block, or do not rush to enter. Always switch to a lower time frame, and then in this instance, you all know by now that I use M15 for entries, and then go to a lower time frame and see what's happening inside that OB, because we have a risk entry and then we have a risk free entry. But in this instance, then was I supposed to enter immediately whenever the order block was touched, or did I have to wait? On H4, this is not an order block. This is a swing low on H4. On D1, sorry. On D1, this is a swing low, but on H4, we clearly see an order block right here. Right here, we clearly see an order block here. Let's put it down. Yeah, here we clearly see an order block on H4 here. So price came Look how price came to respect our order block. With this week here, just one touch here and then it shoot up. This is a lot of money, guys. You should have made a lot of money on if you were focusing on this. Remember, this is H4, so the move from down here to up here, this is a lot of money, like a lot of money. But I did say in the previous videos that sometimes we lose a lot of money when you say this is a risk entry, and sometimes we save a lot of money because it is a risk entry for sure. But in this instance, look what happened there. Price just came only once and then it pushed back up again, and then now we are on a risk-free entry zone. Okay, so again, we see price coming up coming all the way up here. Okay, we see price coming all the way up here, and then why do we have price reject here? That's a story for another day. But for your information, let me show you why price are rejected here and not on this order block here. Okay, as some of you, or if you understand the concept of order block, which is not in full, and then you will have expected price to come and reject here. But let me show you the secret of the market. Why do we have this here? Okay, let's take from okay, let's change this color. I want to be slow a little bit so that you understand. Okay, we do not have to guess, guys. We have to know what we are doing here. We see price from this week here. Price is going down here. Okay, the structure is is going down. Why from this week? Because of a bullish candle prior to this bearish candle. So we take from the bearish candle down here and then we go up again. And then when price goes up, what do you see? We see the break of market structure here. This structure has been broken where here. Okay. What then do we see after the break of market structure? Quickly we see this order block here, this last down candle here. Let me zoom just once so that you'll see what I'm talking about. uh, where was I? Where was I? Where was I? Where was I? Oh, okay, yeah, here. I don't want to confuse anyone. I don't want to confuse anyone. I want us to be on the same page. Okay, I'll start again. The structure started from this week here, the open of the bearish, up until here the open of the bullish, and then moved back up again. And then what do we see? We see the break of market structure here. I think we can all agree that this is a break of market structure right here. We are on H4. And then after the break of market structure, always what do we look for? We look for an order block, the last bearish candle before the price moved up, or the last bearish candle prior to the move up. And where's that bearish candle? It's here. So this is the break of this is the bullish order block where we expected price to come and respect it. And then as you can see, price came into this OB here, then it moved up. So whenever price come to your order block, I've said this, in fact, everything that I'm saying here, I've repeated it before. I've said it before, so now I'm just repeating things. Whenever price come to respect your order block, your take profit is the area where price rejected, or where price tend to come to the order block, it's where your take profit is. And in this instance, where's that? It's up here, is this peak here. So this peak here was our take profit. So as we all know, there's a risk entry, then there's a risk free entry on H4. Before we scale down to H1 or M15, this was our risk entry on H4, but on M15, I think it tells us a different story. And then price, after that, price moved up from the order block to the peak where it rejected, and then came down to, and then it did what? It violated this mitigation block here. It violated this mitigation block here, and then it came down to what? To an order block that was left here. Okay, price respected this order block after it violated this after it violated the okay, where's my order block now? Okay, yeah, here. As I always said, whenever a mitigation block is turned into a breakup block, always look to your left, because there is an order block that will push the price high always. All right, so after this mitigation block was violated, what then does it become now? It now becomes a breakup block. All right, a breakup block with structure doing this. This the break of market structure right here, and then we have another block somewhere down here. So whenever price come here to trade in this order block, and then this here, uh this price action here, this zone here will be our take profit, and then this is a mitigation block. However, if price come down to trade below this order block here, so we quickly have to look for an order block somewhere down here. Okay, somewhere down here where price will come and respect it, and then go back again to the order block that is violated, that are supposed to be a mitigation block, and now it becomes a breakup block. Now instead of buying here, what do we do then? We sell. And then where is our take profit? Our take profit in this instance, I just expanded this. Our take profit in this instance will be this order block here again. But still, if ever this order block has been respected first, and then expect it to form liquidity below below it here. Expect liquidity to be formed after another block is respected. So price is likely to come and trade below this order block. So this move might happen. But what I wanted to show you here is that mitigation block, when it's violated, it becomes a breakup block. Then price will come into it, and then instead of us buying it first, and then we'll have to do what we have to sell. Let's look in this instance here. So price came down here, and then it moved up, and then we see a break of market structure right here, and then we see an order block here. Okay, this order block which was violated by this move here. Okay, after this move here, quickly look at these two candles, 1 2, they came back exactly. Let's put everything in order here. We don't have to second guess. Quickly after a price traded below it, if ever you're focusing on NASDAQ on H4, you would have caught these entries here. 1 2 candles. This is a risk entry, this is a risk free entry. And then look at the sell. Look at the sell all the way to what? To this order block here. Okay, and then what this What did this order block did? It pushed price back to what? To this order block again, to this breaker block again here. So we have a risk entry, and then we have a risk free entry, and then where's your take profit? Again, this would have been your take profit one. If you caught this move, this will be your take profit one. And then hence you see price came down to this order block down here. Okay, so with that said, this is an all-time high, okay, on NASDAQ. This is an all-time high, 15,720.52. All right. So then how would you know? How we gonna sell from here to down here if you missed this move here? As you can see, we have the break of market structure again. Will start here. This candle right here, it pushed price to break what? This previous structure here. This was a sell. Yeah. Okay. This cell structure, it was broken where? Here. And then what do you then do? You expand, then you highlight this candle as your bullish order block, and then let's drag it to the right and see price came into it and traded into it. Price came again, and then price came again, and then let me just leave it here. As you can see, guys, price traded into this order block more than 3 times. So we have 1 2 3 4 5 6 and 7. Okay, it played inside this order block here. So price was in accumulation stage here inside this order block, and then finally it broke this order block. So what does it become? This was a mitigation block. Then what do you see? We see a breaker block now. And then instead of us buying, then we had to sell. And where were we supposed to sell? Right in this week here. Right in this wicked. So this was our risk entry, but whenever we drag it further, then this was our risk-free entry. Yeah. This was our risk-free entry, and then another structure was formed down there. This was and then we had another entry 1 2 here. So now let's go down to M15 and investigate what's happening here. All right. Let's investigate what's happening here, and why do we have price rejecting here, while we have another price rejecting here. Okay, so now we are going to investigate 14745.45. Okay, instead of 14829.92. We know why price returned here, so let's go to M15. On M15, remember I said we investigate 14745.45. Okay, this is the beauty of order blocks. Let's go down to M15. Yeah. Let me zoom in again so that you'll see clear. Okay, we investigate 14745.45. Price came and and tested this here. Let me show you again so that I do it, guess. As you can see, as we all can see it. Yeah. Okay, let's go back to the main order block. Let's go to the order block here. We are on M15 now. This is where price came to this is where the price rejected the order block inside the order block. Okay, this M15. Let's check on M5 what is happening on M5. Then let's go back again where price rejected. Okay, let's add another one where exactly it rejected. It's 14730.85. 14730.85. Okay, let's go back to the order block that we highlighted when price was going up. It's 14730.85. It's exactly here. What do we see again here? We see another break of market structure. Let's zoom in just once. We see another break of market. This move here, this structure was broken here. Okay, this structure was broken here, and then the last bearish candle before the move up is this one here. Okay, this is the last bearish candle before the move that broke the structure up here. So this is just what I wanted to show you guys on NASDAQ. But the question is, what's happening with NASDAQ now? Is it coming down to this order block, or will it just reject from this swing low? And then we have to investigate that on a higher time frame first on H4. We see price came down here, and then now we have to wait for this swing low on daily time frame to be evaluated, and then we'll definitely know that price is coming down to respect this order block here. I hope it was useful information, guys, and I hope you took some notes on it. Let me just go back to my V75. Cheers.